Welcome to the DWS Market Outlook. What are our economic and market forecasts given the disruptiveness of US policy making? Over the next 12 months, markets will be heavily influenced by US politics, just as they have been since Donald Trump took office in January. Quick and radical shifts in US policy have sent the markets on a roller coaster ride ever since. Looking ahead, we must ask ourselves, have we passed peak uncertainty? Or will US policy still be surprising us at the end of the year? You can make good arguments for both. But one thing is fairly certain already. Global trade is changing, not least because we expect the average tariff burden on US imports to quadruple. This should initially dampen economic growth, especially in the US, but the long-term impact on supply chains and individual sectors is difficult to predict. We believe, however, that we have passed peak tariff uncertainty. But this will not prevent further trade-related headlines to stir up markets in the coming months. These are the risks, but our base case scenario assumes that there will be solid economic growth in most regions. For the US, we expect economic activity to slow down over the coming quarters before re-accelerating in the second half of 2026. In Europe, increasing fiscal spending should help to lift the growth outlook. All of this should allow for further earnings growth in equity markets, and it should also keep corporate bonds defaults low. Overall, our return expectations for the next 12 months for most asset classes are positive, but the regional aspect plays an important role this time, as we expect the dollar to weaken. Given the big geopolitical uncertainties, we're focusing on diversification, including using gold as a hedge.